Hello traders and welcome to another video review. Today is Friday, June 24th, 2022. Let's take a look at the Forex calendar. As you can see, the Forex calendar is empty for today. Nothing actually is going on the financial markets. Of course, if we take into the account the calendar, of course, no events here today, so we are pretty much under the influence of the technical side of the market. So let's just jump right on to the charts. We start with the Japanese yen. US dollar to the Japanese yen daily time frame chart had made a the pair had made a new high. This new high was made 136.71. This is the level. So right now we extend our bearish divergence even higher, and please take a look here. We are somewhere here. There you go. This high was made definitely on a lower momentum than the previous one, 100%. Apparently this is now the multi-week or even multi-month divergence, right? This is a big multi-month divergence from this high here in the momentum. This was the level of around 88, 89. This is the lower one, this is the lower one, and this is the lower one, which means that we should see a drop, a pullback, a correction in the US dollar to Japanese yen soon. However, please notice the fact that this market is trending very strongly. So the technical side of the market is showing us, okay, there should be some kind of a pullback or correction because there is a bearish divergence. However, please notice the fact that we are still in the up trend. If we break below the level of 50 on the momentum, it's just during the correction time, and it's just for a brief moment, then we start right back up. So the outlook is still to the upside. The outlook is bullish on the US dollar to Japanese yen. However, please notice the fact we might experience some pullbacks, some corrections along the way, despite the fact that we have a multi-month bearish divergence formed. This is the euro dollar to the Japanese yen. Let's take a look at the US dollar to the Swiss franc. US dollar to the Swiss franc technical resistance at 1.0062, 1.0053 had worked as a charm, and we made a double top pattern, the price pattern. And as you can see here, we last time we dropped towards 9,542 pips. This time almost the same thing happened. The low was at 9,566 pips, which is only 14 pips away from the technical support. So it looks like we are going to trade inside of this range between the recent double top highs and the first important technical support. So the outlook looks steady to bullish. It's steady to bullish because it looks like we still can test the level of 9,542 and then break to the upside, even destroying this pattern here, the double top. Okay, so that's the one of the scenario, less probable. The other scenario, which is much more probable, is that we will finally break below the 9,542 level and then test 9,383, because this double top pattern is telling us that there is still a very active supply side around this level that might just make more pressure on the market participants in order to defend this highs here. So that pattern to the upside is possible, but highly unlikely. This one is much more possible. However, it might take time to bounce and up and down inside of the range before the breakout to the downside will eventually happen. So if we talk about the US dollar Let's take a look at the US dollar index, and we can clearly see here that after the bearish divergence had been made on a daily time frame chart, the market is not that keen to rally again. However, we can see some sort of the trend line that was made here. Let me just put some let me just focus on the parameters of the trend line. There you go. I think that might be some sort of the triangle, and if this triangle is placed correctly, then we should see of course kind of a bouncing up and down, up and down, up and down between the levels of 103.90, 105.01, and then breakout should occur to the downside, because the previous micro trend is to the down, is down basically. So to the downside should be the breakout. Next target 102.35, and then eventually even 101.27. So this is the outlook for the coming days for the US dollar index, which means the other dollar index related pairs should go higher. Let's take a look what is going on the S&P 500 index. This index is clearly following our path of ABC correction to the upside after the bigger cycle degree had been terminated at the level of, to be exact, 3,639 points. So somewhere just below the technical support. However, our target, our next important target, marked in this chart with the green rectangle, located between the levels of 3,529, 3,549, had not been tested. We need to right now continue the up move in the wave A, B, and C, possibly to the level of the previous wave 4 high, which is 4,176. However, this is of course less probable that we break above this level. So after this ABC to the downside had been completed, after the ABC lesser degree cycle to the upside is done, we should still see some sort of the down move on the S&P 500 index. How does it looks like? How this looks like from the bigger perspective? As you can see, since the COVID drop, this drop here, A, B, C to the downside, is the biggest drop since 2021. This decline here, so it looks very nice for bears. It looks very nice for all of the people that think this continuation to the downside is something permanent. So we should now enter the downtrend, and it looks really like a down trend. So we are out of this channel, this multi-year channel, the gray one. Of course, we've made 3 ways to the downside. Fine. We are now trying to bounce. However, please notice the fact that we can still relabel this chart as 1, 2, 3, possible 4 and 5 to the downside, which is even more bearish in the long term. So please keep an eye on the current levels here, after the ABC correction had been done. The key level is of course 4,109, 4,176. If this level is violated, then 1, 2, 3, 4, 5 to the downside is no longer possible, and we are more certain that the ABC correction, complex, a simple collection, but a little bit longer in time and price, had been terminated, and market is ready to move higher. Last but not least, let's just briefly take a look at the Bitcoin. What is Bitcoin doing? The Bitcoin is continuing our scenario as well. We want Bitcoin to go higher. So as you can see here, wave A to the upside almost had been done. Maybe this is the wave A. It looks like one, but I think we should at least try to test this channel lower line, then consolidate and break out to the upside. So far so good. Bullish engulfing pattern, consolidation. Now we're waiting for the confirmation of the wave A extension higher. So this is how it looks right now from the cycles point of view on the Bitcoin to American dollar. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.